Thank you, Sakina. Good morning, everyone. Selamat pagi. We still about 1 hour before the lunch, and I'll try to make this session an interesting one, given that this session is quite connected with the first session, talking about reshoring, friendshoring. I think the key things that we want to know today, which we have a panel of distinguished speakers, my friend, economists, and two professors, not academic, they also are quite in tune with the market economy. And myself is a former economist, and currently I'm with the chamber, which is also very in tune with the prospect of Malaysia investment, FDI. And today we hear our YB Minister of MITI commented about why approval such big numbers, but we haven't seen the realization of the investment. So he used a video to explain it may take about 1 to 3 years for all the 170 billion approved investment in China to be realized. So today, we are happy to have this session, and I try to make it more interesting. I think before that, I'd like to share some slides. And I'd like to start to talking about, under the new government, Madani government, they have launched 4 levels of change, right? You have the Madani framework, followed by new industrial master plan, and you have the national energy transition roadmap, and lastly, the midterm review of the 12 Malaysia plan. So what all this about is to tell the narrative for Malaysia. Where are we going from here? Where we want to reach the target, become the one of the largest or one of the most competitive Asian economy, right? I think we look at the policy initiative, the what called the programs layout. These are all very good on paper, on plans. That comes to execution. The implementation capacity is important. No point talking about initiative if your agency are not able to deliver whatever you need to attract the investment side. So I think, look back to before, we look at year 2020, I think private investment collapsed close to 12%. And it has recovered in the year 2021 and 2022. On average, it's about 2.7 to 7.2%. And in the first half of this year, private investment grew by 4.9%. It's still a long way to go. Yeah, before we look at the pace of private investment has been very uneven. Yeah? If you look at the period 2018, 2020, I mean, it's about 4.8% per annum, has not been very spectacular, I would say. Yeah? And the share of GDP, we've seen 1/3 now down to about 15.9%. I think during the previous 2 governments, I think private investment share to GDP has been quite good, I would say, close to 16, 17%. And now it's just like stagnating. Yeah? And then you look at the next one, approved investment surged. This is a good data. These are approval data between the FDI and the DDI. DDI stands for domestic direct investment. And you look at the compounded growth rate from 2016 to 2019, the DDI approved investment declined by 4.9% per annum compared to FDI surge by 23.1% per annum. And then you look back to post-pandemic 2020 to 2022, the DDI still declined by 6.7% per annum, and your FDI has continued to increase by 25.4%. So I think we are telling the government, we welcome FDI, but we want equally emphasis placed on to attract DDI. That's the message from the Chinese chamber to the Prime Minister, the last 2 Prime Ministers. I think we've done a survey, a very comprehensive survey, to understand why domestic investors are not investing enough in the country. We know a lot of listed companies, non-listed companies have parked their money overseas. We don't stop that. But we have to think how to create a conducive local environment, not just to encourage FDI to come in, but for the domestic investor to retain and to increase their investment. Why we have to say that? Before FDI come to your country, you must have a very strong industrial base to support as a linkages. And the one that they look at you is your SME. Contribute 98.4% of your total industry establishment. So you need to grow DDI. Now, look at FDI. We don't want to be something to be critical about government, but you can know the net FDI flows continue to lag behind some of the neighboring country. You can see from there, whether it's World Bank data, BOP data from Bank Negara, that we are lacking behind, yeah? And the last, in terms of Malaysia Economic Complexity Index, what does it measure? It measures how we use the knowledge, advance of technology to produce sophisticated product and also market. That is something that we are also lagging behind. Now, with this, the panel discussion would like to address the following issues. First, what are the challenges and opportunity for private investment? What it takes to attract private investment? Are our current strategy initiative fall short of the business or investor expectation? And how competitive we are, our landscape, compared to regional peers. And lastly, choosing between DDI and FDI. Both are equally important, but there are something that you have to look beyond that, how to encourage more domestic direct investment. So with this, I'd like to start our panel discussion. The way I handle this panel discussion, I have a common questions for each of the panelists, and followed by different question for the different panelists. And I will allocate about 20 minutes, the last 20 minutes, for the pigeonhole. That will be based on your votings of questions, the burning questions I'd like to ask all these three gentlemen. And I think it's important, it will set the tone on how Malaysia can re-energize private investment. Quality private investment, not about quantity. So there are a lot of issues surrounding this. The first thing I'd like three gentlemen to answer, which is something back in our mind, in your opinion, yeah? So what are the key fundamental factors of supporting and ensure the private investment will continue to be sustained at the very robust rate? We can start with Mano or Prop. Yeah?
Thank you very much. Thank you very much for inviting me. Let me just take the first question. I think this morning we had a discussion, even the second session. What are the factors that actually drive private investment, either foreign or domestic? There are 4 Ps. The first one is actually about political certainty. I think we have to accept the fact that over the last few years, the political uncertainty in Malaysia did not contribute, because we know that the political situation aligns to a lot of the economic development agenda. So political uncertainty is one of the big drivers, not just in Malaysia, but in many countries. The second one is policy inconsistencies. I think it was also touched, the second P, which is essentially leads to, whenever you have a new government, you've got new policies, new shifts, and if you are looking at long-term investments, you've got to think very carefully where the alignment are. The third one is actually productivity. I think we talked about labor and a whole range. We know that our TFP is declining significantly. So we really need to move up the productivity value chain. And that links also to the FDI and DDI nexus. And I think it was touched in the last session on why aren't we building very strong, sustainable supply chain, domestic firms? We've got a lot of fantastic incentive for FDIs. What about the domestic firms? So we hope that we can unravel that, The fourth one is actually pragmatism. We really need to be pragmatic in our policies. How do we identify key industries, key drivers? We've got some fantastic policies, but it's not translated down to how do we pragmatically implement that. So the 4 Ps actually lead to the 5th P, which is actually parallelism in implementation of our policies. Because we've got so many plans, but we lack that integration. And I think investors, both domestic and foreign, are looking where is our direction, particularly the long-term direction. So again, stop with this and then perhaps give my colleagues to speak about, but I'll come back on the pragmatism and also the kind of state of industries we are. There are numerous studies that have shown that our policies, there are three aspects of competitiveness. One is absorptive capability, the capability of our firms to absorb new knowledge. But many of them have stayed at that level, partly because of the issue of domestic foreign investment. They are unable to move up to the adaptive capability nor innovative capability. And why that is the case, perhaps maybe we'll discuss a little bit more further.
Thank you. Prof.
Okay. So if we want to talk about investment in general, there is just one driver of investment, and that is the rate of return on investment. That's it.
Profitability. Yeah.
Yes, anything else, in my view, I'm talking as an economist, of course, anything else is peripheral. If Malaysia is able to generate investment opportunities which deliver high returns, the domestic and the foreign investors will come, of course. But what we know about the general investment environment in Malaysia is that the returns suck, frankly. They really are not good. And if you have a very low return economy in terms of return on investment, why would you invest here? That's the issue, and this is really what you have to grapple with. It's not just a matter of attracting foreign investors here. We know what the issues are in terms of attracting foreign investors. Malaysia is small. In the past, when I came here 20 years ago, Malaysia was seen as an entry point to other parts of ASEAN and even wider Asia. This is because you couldn't get into Indonesia, you couldn't get into Vietnam because they were really very closed economies. Now, Vietnam is open. Unlike anything that I've said, I first went there 20 years ago, and it reminds me of what Malaysia was like 20 years ago if you go to Vietnam now. So instead of using Malaysia as an entry point to Vietnam, foreign investors go directly to Vietnam. And Vietnam has 100 million people compared to Malaysia's 33 million people. In Indonesia, it's also very much easier to make investments directly into Indonesia. And they have 270 million people. Now, before you might come to Malaysia and then export into Indonesia. Now you go directly to Indonesia. So that is a big problem in terms of Malaysia's positioning for FDI. The second is that the investment environment and the living environment here in Malaysia, and I'll tell you this as a foreigner, has deteriorated terribly over the course of the last 20 years. And Malaysia is not at all as welcoming to foreigners or to foreign investors as it was before.
In what aspect, when you talk about North
Well, we were talking earlier about, I have a residence pass, pass talent, and I renewed it earlier this year. When I first got it, it came to me within a week I got my residence pass. This time, it took 3 or 4 months to get the resident pass. And there is no benefits to this resident pass apart from being able to stay here for 10 years and to move between jobs. So at the weekend, for example, I was at a hotel. I had to pay the tourist tax. And I say to them, I'm not a tourist, I'm a resident. And they say, well, no, you still have to pay the tourist tax.
I mean, your currency is strong. Dollar is strong, can pay a bit. Export taxes. No, I'm sorry. I just want to add on about, we talk about the resident pass. I think someone can recall back the Rafizi under the Pemuda, he has shortened and expedite the processing for the talent. And we are part of the council member, chamber. I think for those fast track, I think within 3 days, I can't remember, 3 or 5 days, you can get all your talent permit to be approved, and those are on the longer track will be less than 10 days. I think they are working on that. I think they recognize and acknowledge the problem of getting the foreign talent to come in. And I think most important on this part that immigration has to be open-minded. I think if you can't find, if the employer cannot get local talent, they have to be open up and let them bring the foreign talent. I think that is something that we have to accept, the fact that globally, there are shortage of talent. And when you need investment, the skilled people are the one that you want to support, right? So sorry
Yes.
to
So, I mean,
interrupt.
the example was just part of a broader narrative that Malaysia is a less attractive place for foreign investors than it has been in the past, and it is increasingly less attractive than competitor countries in the region, in Vietnam or in Indonesia or even the Philippines. It's much less attractive than it was before. But the third issue, which comes back to what I said a moment ago, is that the rate of return on investments here in Malaysia is so much worse than you can get in other parts of the region. And that is largely driven by policy. It's driven by some of the issues that you just mentioned. And what that's doing is not just discouraging foreign investors from coming here because the rates of return are very low, but it's encouraging Malaysian investors to take the money out and invest overseas. So if you look at net foreign direct investment, money coming in and then Malaysians taking money out, this has been in trend decline since 2016. In the last year or so, there was a big spike, but it has been declining significantly. And this is because even Malaysian investors can find better opportunities overseas, which is why the Prime Minister has now encouraged or insisted or advised the GLICs to spend more money in the domestic economy, which is bad for us. If EPF spend more money in the Malaysian economy getting 6%, it means they can't put more money overseas and get twice that or 3 times that. And then that has an effect on our pensions in the long term.
No, you bring about the GLC. I think there's something related issue about whether the presence of GLC in almost every sector of the economy crowding out the private investor. I think if you study some of the determinants of private investment in Malaysia, in addition to what you mentioned of rate of return, profitability, some even cited, based on our survey done, that GLC presence could also crowd out, not just the liquidity, but also in sector which they are incompetent, they also want to compete with the private sector. So that could drain eventually the national resources, or they can't cope, then they will turn to budget for funding. So what do you think about this? I mean,
well, I mean, this is also part of a long-term trend.
Long-term trend, yeah.
I think we have to be very careful when we talk about the government, because the current government has been in office for less than 12 months. So it isn't the fault of the current government. This is a decades-old problem, and there is a significant problem in crowding out, GLCs crowding out, but also the GLICs, the investment corporations, crowding out the space as well for foreign investors.
Okay.
And if you were to free them up and allow them to change their strategic asset allocation and put more of their funds overseas and just maximize their return, no matter where it came from, then you would free up market space for foreign investors to come in.
Yes.
If you look at Bursa, we know that many of the equities on Bursa are simply uninvestable for foreign investors, because they're closely held shares.
Correct.
And they simply can't buy a significant quantity of shares to make it worthwhile for them, given the costs and the exchange rate risk.
Okay.
And so we have seen net outflows from Bursa recently, and it's got worse recently.
Okay.
And again, this is part of closing down the space. If you open up the space and make it more competitive and more agile, you will get higher rates of return, more opportunities, and then domestic and foreign investment will rise.
On the point that I'd like to add on a bit about the rate of return, profitability, I think, Malaysia all the while have been well protected in the form of subsidies. Yeah, business people know. I think going forward, it will be more even challenging. The cost pressure, not just coming from the external pressure, your ringgit falling, but also the government going forward is going to implement targeted subsidy rationalization, whether your gas, your water, your energy, fuel. So all this will put business on more pressure and to be more competitive, to be more cost efficient. So I think this is one aspect that we have to consider, because we are lucky. Not just individual consumer household, everyone is very lucky, complacent, everything is under protected environment. So the moment you open up, I hope it's a gradual open up, so that the business, in particular MSME, can able to adjust accordingly. And I'm not even talking about wage, wage. I think government is pushing hard for progressive wage model to pay a good wage based on productivity. That also help to increase the income and also help to lower the cost of the businesses. I think maybe now we move on to Mano on this.
If we are talking about, if you talk about the challenges, for me the basic challenge will be the education. Our education, we are not producing the right people, okay, in terms of the right skill, in order to, to create high skill, productive people to work in these FDIs. So you need to challenge the status quo of the education in the universities. The local universities are not, I used to say, I used to advise them that you need to have 3+1 year of study, in the local universities. I think the private universities are already doing that. 3+1 meaning 3 years in the university and 1 year in the industries. If you can create that kind of labor or the university graduates, okay, I'm sure you can sort of like, there won't be any problem of complaints coming from your labor is not skilled. See, we don't get skilled labor and all that. Human capital is very important. So I believe that could be and the other thing is, whether you like it or not, the government policies should focus not only just, I don't want them to focus on the quantity, but more on quality FDIs, meaning that they should focus on FDIs that is actually on the higher end, okay? More like high-tech and, high-tech type of investment into the country. That is very important, okay? The second thing is, I look at the challenges will be the political stability. You all know that those days, we used to have 5 years, we have one prime minister. The latest experience is 5 years, we have 4 prime ministers. Okay? And people look at it, we are more like Thailand already now. Thailand used to be this way. Every now and then, there will be a coup, political coup, and, the prime minister changing and all that. We need to focus on this. Political stability is very important if you want to attract more FDI into the country. The third one is ease of doing business. Ease of doing business in terms of bureaucracy, yes, I agree that whatever my friend Mr. Lee has mentioned, that the bureaucracy is really not bearable, okay? Because I heard in other ASEAN countries, you can get the approval very fast and all that, okay? You go to one place, you get sort out everything within 2 weeks. But here in Malaysia, you have to go to different places. Although we have the agency called Pemuda. Pemuda is supposed to make things easier, but the investors are still complaining that they are not getting a hand in order to get the approval done within the short period of time. And the other thing, in the ease of doing business, you also talk about corporate tax. Malaysia's corporate tax is 24%. Singapore is 17%. So where will you go? Tell me. Or Thailand, Vietnam and all that are all a lower end of corporate tax. So investors look at it, why should I come here? When I come here to Malaysia, I have to pay higher corporate tax. The other thing, I am not even assured of high-skilled labor, okay? And this country will not move to the high skill or high income nation as long as you have the 7 million plus foreign employees hanging around everywhere. Yes, statistics shows that you have only 2 million plus. But out of the statistics, you can see they even outnumbered the number of Indians in Malaysia. We used to be, nowadays we used to joke around that we are not the third race in Malaysia. It is the other, the foreign employees are the third race in Malaysia. We are already becoming fourth. That's a joke. Okay.
Hey, thank you, Mano. I think on the part you mentioned about, I agree with you, corporate tax rate is important, but based on the survey done by among the CEOs, right, in addition to corporate tax rate, I think what they look for is about the governance, transparency, and clarity of the policy. And the most important they're looking for is the conducive environment. I think to them, maybe corporate tax rate is important, but not that important if the country policies are not consistent. I would say, I would sum it in 4 C's, yeah? The 4 C's. One is confidence, clarity, certainty, and consistency. That's important. No point you announce some policy and then you roll back. That's why our industry feedback to the government, please engage us. Engage us, whether you want to come out capital gain tax, luxury tax, whatever tax you want to do, engage the industry and understand how it works, rather than you just announce without any detail, and industry will get a bit, mixed up with what really you want to do. So I think it's important on the part. So now let's move on to another common issue which I just now highlighted, how to choose between DDI and FDI. I think that's important. Based on a survey done by the National Chamber of Commerce and Industry of Malaysia, which engaged us, the center, to conduct a survey. That was way back in 2020, and we presented the findings to the then Prime Minister and NEAC, and the findings showed that investment promotion agency favor DDI relative to favor the FDI relative to DDI. And that was, the finding was presented, and Maida was there. They stared at me. They were, no, it's not true. But the survey showed the perception of the investment agency on the ground. They prefer FDI versus DDI. Why? KPI. The KPI, the Menteri Besar will look good to announce, wow, which are the big foreign investors come to invest in my states, but not those announcements related to DDI first. And I'd like the panelists to comment, what can we do to make the two forms of investment work together in order to generate the maximum benefits for the economy? So I've seen how they reacted to the findings, and I'm happy that finally we push the idea that government need to set a KPI for DDI. It's already mentioned, announced already, and they also want to consolidate 31 promotion agency under the wing of MIDA. It's a good move to me. So any comments on that?
Can I go? I think if you see both the FDI and including the discussion on the GLCs, if you see that the most important reason why FDIs and GLCs, for that matter, is to create value in the economy, and that's what mentioned, not just return on investment, but return on value. If you got the value, then the investments go up. But the whole idea is that to bring in FDIs and supporting GLCs is to build a local supply chain, right? Do we have the policies that build the local supply chain? If you look in China or Korea or many other places, yes, they want FDIs, but they want to make sure that the local firms are built. That is why you see that the Huawei's and others started emerging, right? Do we have the leverage to do that? Do we have the right incentive to do that? But let's start off with the GLCs first, right? You talked about crowding out, both, not just the GLCs, but a recent study that we showed that government research institutions, right? We know industries need innovation, we need infrastructure and so on, but we have a lot of investments in public research institutions and government research institutions. But what you have is that they compete with industries on research grants, right? They compete on the market with firms. So how do you build trust? The universities and others don't want to work. How do you build trust, right? So this is number one. So we've got to start off with the GLCs because they have that clout in terms of the substance, in terms of quantum and the quality. So building those supply chains. And then ensuring that the FDIs come in are aligned to the targeted supply chain that we want to build globally. And I think this is where that strategic, not just bringing in any FDIs, but ensuring there are conditions to build jointly with the GLCs and the local supply chain. Otherwise, I think that is why you see that many of the firms are going overseas because they get a lot more support. A lot more support. For them, it's like FDIs, and they, instead of domestically investing, are getting the benefits of being an FDI in other countries. What is the net cost? We lose out. We don't build strong supply chains. We don't build talent. One of the key things when you talk to foreign firms is that the type of investments they bring in is also tied to the talent that you have, right? So we become overly reliant on cheap labor. Small, medium enterprises don't have the technology or support to move up the value chain. So if you piece all the puzzles, I think there is a story with having a much more pragmatic investment strategy where you bring the GLCs, GLICs, public research institutions, and foreign direct investments to build our local supply chain.
So do you think the new industrial master plan has addressed this?
I think
there's a chapter talking about how to grow the SME to be the support of the whole transformation.
Yes, it is there, but how do you do the how, right? How do you link it up with the university, public research institutions, aligning all this together? Yes, broad statements are there, but we really need to do how to do the how.
But I think, to be fair, I think some of the local SME, they have done well. I think for those who are familiar with the technology sector in the Penang, that's something we are very proud of, Malaysians, right? Not just they came out, graduated, the supplier of the MMC, but they themselves also proven that Malaysia had the strength and capability to grow and deepen their supply chain. But I think we can do even more. Sure. I think we hope that the agency like MITI, MIDA, and work together with the private sector, like what you mentioned, the public-private sector, institution training, the grants. Government can support the grant, but make sure whatever the outcome of the grant will be commercialized. That's important. I think that's something that we are lacking. If you compare to countries like Taiwan, Korea, I think they are good in doing those collaboration with the industry, academic, and plus the the students, and can come out with those commercialized type of R&D technology, and that will help Malaysia to move up, to integrate with the supply chain.
So adding on to that, if you see under the technology readiness levels, right?
Right.
80% of our research is done at the university level. 80%.
Yeah.
Right?
It's not
So most of the universities are TRL 1, 2, and 3. And then you've got the big guys that are doing TRL 9, but what we are missing is TRL 4, 5, 6, the development part where the fundamental research is moving through the pipeline with industries. That is a major gap. And this is where that linkages, more pragmatic policies are really critical.
Thank you. I read your comment, very critical comment about the NIMP. You were talking about why we focus on aerospace. Maybe you can relate in the context of this DDI and FDI.
Okay. Let me just address this issue about DDI and FDI, and then I'll talk a little bit, if I may, about the master plan. But I don't want to talk too much about that because it's quite controversial. You can read it in FMT. Just read what I say in FMT. I have to speak with Kian Ming about this at the end of the month, so I think we will have another chance for that. But let's just talk about DDI and FDI. I would just like to make a general observation, which is investment doesn't have a nationality, actually. You know, as economists, when we look at investment, we're talking about money. That's it. And we don't care where it comes from. It's as simple as that. And we also don't care if Malaysian companies invest overseas, provided they're getting a good return, because that return is repatriated. So the only real concern about where the investment comes from is about the repatriation. So foreign investors come here, they do very well, and then they repatriate. And in fact, some of you have seen the table that I put there. The point about that table is this. The net FDI inflows are massively outweighed. Here it is, here. So if you look at net FDI flows, no, you can't see it. I can't see it either. So if we look at the net FDI flows, they are massively outweighed by the repatriation of the profits. So the foreign company, here it is. So the foreign companies, for example, 2022, invested 74.6 billion in actual investments. But they took out 104 billion, right? So that's the problem. And this is also part of the problem with the weakening ringgit, because they're selling and ringgit to repatriate. So that's the only real reason why we care about where the investment comes from, because they repatriate. But we similarly have Malaysian companies investing overseas who are repatriating that back. And this is another problem with the exchange rate, because they're not doing it quickly enough. So recently, we know that Bank Negara said that they want to encourage Malaysian companies to repatriate their profits more quickly, because then they buy ringgit, and then that will help to push the ringgit back up. So this is part of the problem in terms of the weakening ringgit. But in terms of the overall investment, we don't care where it comes from. It doesn't have a nationality. It's as simple as that, right? So then you ask a question about the new industrial master plan. Let me just say quickly, I thought it was absolutely terrible. I really thought it was a terrible plan, and it made me think, why would a new government, a new unity government, come up with such a terrible proposal? And then I found out it actually isn't the unity government's proposal, it's the rehash of the previous government proposal. The reason I think it's terrible is that it's just exactly the same as we have seen so many times before, not just in the previous industrial master plans, but in many of the other government policies of previous administrations. 4 mission-based outcomes, these catalytic enablers, 27 strategic plans, 62 action plans. This is just a cascade of patronage. And in the end, it won't deliver the vibrancy, the agility, even for the SMEs, it won't deliver that. And you can see it in the design of the policy, actually. And I felt that it was a real missed opportunity. But hopefully, it won't be implemented. And if it's not implemented, then most of the businesses, because they said 95 billion is the target for the investment, to increase the rate of growth of investment by 0.5%. That was the ambition. So it's lacking in ambition, it's lacking in the total investment, but the total investment, fortunately, is not coming from the government. 90% of it is coming from the private sector, which would have happened anyway. So let's hope that the private sector is given some space to push in that investment. Then you might get some of the, a greater sense of agility and competitiveness.
I need to move on to the Q&A now, because we have about 10 minutes to go. There are quite a number of questions. I will choose those who are, what are the positive things in past? Can you hear me? Oh, sorry. I was a bit excited with the questions. He's talking about, how about the positive parts of the Malaysia have done very well so that we can concentrate on it? What are those? I mean, what are those things that you think are positive for Malaysia?
Can I?
Yeah.
If you see, if at all any industry that has done really well in Malaysia is actually the palm oil industry. Yes. The palm oil industry, it's everywhere. It's because it's industry driven. If you look at the Palm Oil Research Institution, you look at it is industry driven. In spite of the onslaught of bad press, they still push ahead. Yes. Pretty much every biscuit, every chocolate has Malaysian palm oil, right? Every soap that you use has a Malaysian palm oil. And that is industry driven with good support from government and incentives. Yes. That's the kind of big, industries that we should start thinking about building the supply chain. Yes, they're getting a lot of heat on environment and so on. But you see that, they made a case on palm oil is the cheapest edible oil compared to corn and others in a very scientific way, right? If palm oil was not there, the Western countries would have to grow a lot more corn, a lot more damaging the environment. So it's not just doing the science, but also communicating that science really well and building that supply chain. So we have done that really well. Another industry is sukuk in the financial sector. We were the leaders, yes, but we are losing the game. Yes. So again, there are industries that we have done really well. Another third example is that, did you know that Malaysian education, private education, is the 5th biggest globally? Yet it gets very little investment, yes, from government. None. See? I'll give you an example. A lot of foreign investments come in, you get all kinds of double deduction, R&D, and so on. But private higher education puts in a lot of money on R&D, but very little you get. Yet it contributes billions of dollars to the economy. It nurtures the next generation talent. We talked about talent. But it also brings in the best talent from around the world that we could retain, but yet we don't have the policies to keep that. So I'm giving you 3 examples.
Thank you.
Okay, can I add to that? Because I agree, problem. All of those 3 things are absolutely spot on. But I would also add oil and gas, okay, because Petronas' contribution to Malaysia has been phenomenal since the 1970s. And there is at least another 15 years of that, and if it's managed properly, it could be another 40 years. But instead of focusing on that massive contribution that has been made over decades, the agenda is pushing away toward a green economy thing, when actually the truth is that Petronas will continue to be one of the largest contributors to Malaysian economic growth. The second area is a little bit, you mentioned the Islamic finance, but I would say the entire halal ecosystem as a whole, and the work that HDC does in the halal space is extremely important, particularly in terms of halal certification. Malaysian halal certification is almost globally accepted, whereas if you get it from Indonesia or other countries, it's often not accepted in other markets. But what HDC does is extremely important, and that's a massive industry. I think it's $4 or $5 trillion in terms of space. So these are areas that we've had 5 areas, but now also the rare earth. And this new idea that, we have all of these rare earth resources, and these will be extremely important. There's another commodity-based investment process that will drive Malaysian investment in the future. But if you look at all of these areas that we have just pointed out, none of these things are in the industrial master plan. Okay, industrial master plan is about rocket ships and EVs. I think
on that part, I beg to differ from you, because we read the new industrial master plan. Yes, the government highlighted the 5 high growth and high industry, but if you look at the whole chapter, they also have listed 21 sector, which is related to what you mentioned, resource and non-resource based. So I think basically we had a lot of opportunity. I think it's up to individual or private investor with the facilitation from the government side to explore the opportunity. I think what we mentioned about energy, clean energy, I think Prime Minister was just in Singapore. I think they are going to sign something to the extent of export energy from Sarawak to Singapore. So I would be less critical about the NNP. Not that I know the people working behind there, but I was participated in one of the webinar on NIMP, and one of the professor was one of the advisors to the NIMP. I think there's a lot of things there, and of course, depends on which sector you are. Some people feel kecil hati because it was not highlighted as one of 5, like palm oil industry, and some were a bit unhappy because they were not called on stage to receive the certificate from the Prime Minister, which is something they can shot and put in their Facebook. But I think regardless that, if you read the report, there are 21 sectors. Each one have their play in the NIMP. To me, it's about how the government facilitate. I always say that you can have a lot of plans, initiative, incentivize, but you need to execute. I think there's a lot of thing for MITI and MIDA to do after this NIMP, and I hope this is the last chance for us to drive the next wave of the industrial transformation. Yeah. So I will take one more last question. That is about for Professor Jeffrey. I think they want to know what are the factors you think can Malaysia do further to attract foreign investment?
Okay, so if I look at the question, it says what can Malaysia do to make itself more attractive for foreign for foreign and domestic investors? For foreign investors, my advice would be stop treating us like foreigners. That's it. And just treat us like investors.
Okay.
And give us exactly the same investment opportunities as anybody else. And then we will bring our money and we will spend it here. And for domestic investors, and therefore also for foreign investors, it is very much a question of removing regulations, making it, you mentioned, the ease of investment, the ease of doing business. This is very hard for foreigners. It's also very hard for domestic businesses, by the way. But you need to have a bonfire of these regulations, a bonfire of the red tape, because that's what holds back investors. It doesn't matter if you're big or small, you're domestic, you're foreign. If it's difficult to invest here, you won't do it. You will go somewhere where it's easy. So those are the two things. Treat investors in the same way, because it's just money. Right? And secondly, make it as easy as possible for them to give you their money. That's it.
Agree, totally agree, because that also conform with our findings. Top the list is about regulation compliance. Make it simple. I think we even informed the Prime Minister, your one stop is many stops. It's not one stop, no, many stops to go. So I think these are the real experience encounter, not just by the local investor, but some of the foreign investor. I think recently, I think some of the foreign investors also feedback to the Prime Minister. I think Prime Minister was in New York, came back and say, how come people still complain? The days, the number of days to process is still quite slow. I think that's something that they really have to look into it. I think in fact, today we also wanted to have MIDA to be here as part of the panelists. I was very eagerly to have them on because we have these 3 panelists, and then they can sparring, talking about feedback. So, but unfortunately, they decided not to, but I hope they also send the wakil here. So I think we are running out of time because we need more time to enjoy our lunch and discuss. So I'd like to end my discussion here, and I'd like to thank Ram and also our 3 experts to share their thought about how to make Malaysia more attractive to FDI and also encourage more DDI. And thank you, everyone. Let's give them a round of applause.